Good morning. Can we please take our seats? Okay. Welcome to the Central Bank of Belize's introductory press briefing. Can we please rise for the national anthem of Belize? Thank you. Kindly be seated. My name is Giselle Waite, and I'm the Assistant Manager of the Economic Intelligence Unit in the Research Department. I will also be the moderator for what we intend to be the first of a series of ongoing public engagement activities. Let me start off by introducing the head table, which is comprised of members of the Central Bank's executive team. On the right, we have the governor, Mr. Karim Michael. Mr. Michael took office as governor in 2021 and has been a central banker for more than 20 years. Next, we have the Deputy Governor of Financial Services, Mr. Hollis Parham. Mr. Parham assumed office as Deputy Governor for the operational arm of the bank in 2021 and has been with the bank well over 39 years. Finally, Mrs. Leticia Murillo, who is the Deputy Governor of Research, Supervision, and Compliance. Mrs. Murillo took over the policy arm of the bank in 2022 and has been with the institution for more than 10 years. The purpose of today's press briefing is to provide an overview of the roles and functions of the central bank while also providing developments on the state of the economy. Once the governor has concluded his presentation, there will be a question and answer segment where members of the press will be given the opportunity to ask questions, which should be in line with the contents of today's presentation. We ask you to be mindful of everyone's time here today. Thereafter, there'll be a barcode for you to access an evaluation form. We would appreciate your feedback on today's session. So without any further ado, we welcome to the podium the Governor of the Central Bank, Mr. Karim Michael.
Thank you, Giselle. Good morning, execs, managers, other members of Central Bank's staff, and of course, the press. It's indeed a pleasure to be here this morning to discuss the role of Central Bank and the economy. Currently, the bank is expanding its communication strategy to include regular press briefings as a communication tool to provide more detailed information to the Belizean public on economic and financial central banking issues. This is the first of what I hope to be several more press briefings with the goal of increasing public awareness. So I'll get right into it. For some of you who may not be aware, the Central Bank has embarked on a financial literacy program. And while it's being driven largely so far by the Central Bank, with some assistance from other government agencies, a key component of that hasn't really gotten off the ground is this portion, having more interface with the public and indeed the press. And this is why now it's deliberate for us to incorporate that into our financial literacy program and also in our communication strategy. So the Central Bank's twin mandate. Our mission is to promote monetary and financial systems, the stability of monetary and financial systems for the well-being of Belize. This is anchored in Section 6 of the Central Bank Act. And so whatever it is that we do comes directly or emanates from the various pieces or several pieces of legislation. The parent legislation is the Central Bank Act, and then it branches out into Domestic Banks and Financial Institutions Act, the Credit Union Act, Money Lenders Act, National Payment Systems Act, and of course a whole suite of other accompanying regulations. Coming from that Section 6, we have a twin mandate of monetary stability and financial stability. And we'll get into the nuances of these later on in the presentation. It's important for me to point out the highlight in bold. Whatever we do as the central bank is with a high degree of diligent oversight and also with objectivity. So, monetary stability. This boils down essentially to defense of the exchange rate peg, the $2 to $1 exchange rate. And we do that, we value it, we hold it sacred, and we go to whatever costs and whatever ends to maintain that stability, because it's important for investor confidence, among other things. Related to that and connected to that is our monetary policy, which we effect through various instruments. The ones which we have used quite a bit recently are the liquid asset reserve requirements and also our cash reserve requirements. We also have a securities requirement which we have zeroed out, and other tools that will come later on in the presentation. On the financial stability side, we have prudential oversight, prudential supervision function. We have a payment and settlement mandate. The central bank is the sole entity responsible for the issuance of currency. And also we act as fiscal agent to the government. In other words, we are banker to the government. To get into the first pillar, which is monetary stability. What the exchange rate does is simply protect the purchasing power which you have in your pockets. That purchasing power is simply 2 Belize dollar to 1 US dollar. I will not get into some of the technicalities of why the exchange rate guards us against inflation, but I will let the charts sort of speak for themselves. So for the past 30 years, and I've only shown 23 here, Belize's average inflation has roughly been around 1.8%. This is a solid red line across. The black line shows the movements on an annual basis. There have been two periods where you can say that inflation has peaked out of normal bounds. That is in 2008, 6.4, and in 2022, 6.3. Starting with the first one, you will know that this is an external shock, the conflicts, geopolitical tensions, that sort of thing. And I think we are all familiar with that story. Similar case in 2008, right after the global financial crisis. There was a shock again to fuel prices, and that's what resulted in that 6.4% that you see. Now we're functioning under a pegged exchange rate. On the right-hand side, Belize again is represented by that solid red line. We have as comparison Barbados, Jamaica, Trinidad and Tobago, the Bahamas, and Latin 5, which includes Brazil, Chile, Colombia, Mexico, and Peru. Out of the Caribbean islands, only Bahamas is a pegged exchange rate like Belize. Belize outperforms all of these in terms of inflation. And that, again, is largely as a result of the stability or anchoring our exchange to the US dollar at a 2 to 1. So you can see Belize in red, Bahamas is the black, and these closely move together. above Jamaica, which has a floating exchange rate, is tops the chart. And then below it, you have Trinidad and Tobago. And then the Latin 5, which I mentioned, is just above. Barbados also monitors or trends closely with Belize. And let me correct it. Barbados also has a fixed exchange rate, but also patterns in a similar way. So, maintaining the peg. What is necessary for us to maintain the peg is a pool of reserves denominated in US dollars. This is challenging because Belize is a very open economy. If you measure openness, which is imports plus exports divided by GDP, that ratio amounts to 101%. Globally, internationally, we rank 12th in terms of degree of openness in the world. This should be not any kind of news to anybody in this room. That means we're simply not self-sufficient. We need to import. Out of every additional dollar earned in Belize, approximately 50 cents is spent on imports. Additionally, both the public and private sectors need to service their external loans by paying principal and interest payments. So, if we know that there are limited earners of foreign exchange within the country, and we know that we don't produce our own goods and services, but we have to import for the economy to maintain a level of activity, we have to focus on managing that limited pool of foreign exchange. Where does the foreign exchange come from? So for the first half of the year, January to June, loan disbursements have amounted to 141 million Belize dollars. Simply, guys, divide it by 2, and that's the US dollars that have added to reserves. Tourism, 763.1 million. Foreign direct investment, around 124.8 million. Exports, 504 million. And this includes re-exports from the commercial free zone. Now, these are the inflows side. What drains the foreign exchange, what it is used for, debt servicing, 95.9 million. Imports, $1.2 billion for the first half of the year. And several entities who are ultimate beneficial owners are non-residents have repatriated a sizable amount of 124.5 million. We know SIB in latest statistics and press release often talks about the size of the merchandise trade deficit. It's clear to be seen here. Imports minus your exports, that's a huge amount that needs to be financed for us to maintain our economy. But this is the additional picture. Where does that additional foreign exchange come from? And you can clearly see remittances adds quite a bit, tourism add, foreign direct investment, supplies. So the central bank has to manage this dynamic. And what we like to think about it is that it's a faucet and we want to control the valve. How much water we let out in certain times when there's shortages, and if there's sufficient in the system, then there's no need for the central bank to adjust its policy or the administration of its exchange rate, its exchange control framework. So there are authorized dealers. Authorized dealers are largely the commercial banks. And the central bank looks at these flows, and through its permit application, which is largely for us to keep an eye on where we are with these inflows versus outflows, then gives that authority back to the commercial bank. The commercial bank uses its pool of foreign exchange to then sell to the everyday person or the person that is requiring the foreign exchange. What we use as a signal or an indicator when there's shortages in the system or when there's pressures on the exchange rate are the two things on the right-hand side. This is the 40% foreign asset ratio. Again, this is by law. Central bank must maintain international reserves of 40% of the total amount of currency and liabilities that it holds on its balance sheet. And a common one, which everybody should also be familiar with, is the international benchmark of 3 months of import coverage. I explained this already summarily, that the pool concept is a joint effort. It is one where we understand that earners of foreign exchange is much smaller than those that need foreign exchange. So there's a very limited group of earners of foreign exchange within the system. And so those who earn, we have to then utilize those earnings or US dollars to then be made available to the public for importation of fuel, pharmaceuticals, other essentials, data, broadband capacity, that sort of thing. And so when the commercial banks get this foreign exchange, they're the ones to really then sell back to the public for these essential things. A foreign exchange permit application is just our way of tracking this dynamic, this interaction between inflows and outflows. I know it is considered restrictive, bureaucratic, but for the most part, everything that is imports, everything that is current in nature, recurring in nature, central bank gives automatic approval for that foreign exchange request and permit. On the capital side now, those repatriation of dividends, we want to make sure that you are indeed a legitimate investor in Belize and that you have earned foreign exchange, because then you have a right then to take it back out. This is why you have made that investment. And so we ask for a little bit more information, but still the central bank processes those approvals, and then that investor goes back to the commercial bank to then request the foreign exchange to go out of the country. Bit of statistics. Over the past 3 years, even in the height of COVID, the central bank has processed quite a number of foreign exchange permits. This is largely the current account permits that I'm talking about. These add up to roughly 65,000 applications and with a value of $2.2 billion. Again, on the capital side, these are your land transactions. We have also done quite a bit, land and any other type of investment, whether shares or securities. We have also processed around 5,772. And the turnaround, one of the complaints that we have gotten quite a bit is that it takes quite a long while for the central bank to, for the applicant to hear back from the central bank with either approval or request for additional information. That has improved quite a bit. I would say that the average processing time for current account transactions now is half of the day, if not only a couple hours, while land, depending if we are unsure if that investment has been registered or had been registered before, we will tend to reach out back to the applicant to ask for additional information. But nothing so far over the past 3 years have gone beyond 2 to 3 days. COVID also began our initiative to modernize this exchange control framework as well. Recall previously that applicants used to have to drive to the central bank or find their way to the central bank and then sit with our staff to then complete an application. That's no longer the case. That manual process has changed quite a bit, and the application now is largely electronic and submitted to the staff of the central bank, and then we return that back to the applicant. And we'll do more modernization of this exchange control framework in the next year or two. The other tools, so we've touched on maintaining the peg specifically, but our monetary policy tools also go towards supporting the management of exchange control. So we have to look at the indirect policy tools. We have reserve requirements of the commercial banks. In other words, each commercial bank must maintain a certain level of what we call liquid assets. Part of it is cash that is held with the central bank, others in short-term instruments, short-term foreign assets, or balances with other institutions. We manipulate the percentage, we adjust the percentage of these reserve requirements to control how much money and credit is available in the banking system. If you are extending more credit, and because of the statistic which I read earlier, that credit will largely result in an increase in imports. So in times when there's tightness on the foreign exchange market, we would adjust these reserve requirements to then contain or curtail credit, thereby reducing pressures for us to import. Also, within the Central Bank Act, there are direct tools which we have not utilized at all. These are interest rate controls, credit controls. Now, part of the mandate, and again in part 6 of, in section 6 of the Central Bank Act, is maintaining credit conditions conducive to economic growth, of course. We have, the central bank can tell commercial banks that you cannot lend at a certain rate, that there's a cap on your lending rate. We can also say that you can only extend a certain amount of loans for any given year of certain value. We haven't utilized these tools because they are largely distortionary. The central bank also has a lending window. If a commercial bank runs into any sort of tightness, they can come directly to the central bank to lend, for us to lend to them for liquidity support. And this is simply a chronology of how we have adjusted the indirect tools of statutory liquidity requirements and cash liquidity requirements. The most recent one is in 2020, at the onset of COVID, when we understood, or we quickly diagnosed, that there would have been a tightness on liquidity because of the huge, significant economic contraction and activity slowing down, transactions slowing down, probably to a halt. And so we wanted to make the space available on commercial banks' balance sheet for them to provide liquidity support refinancing options to those who had loans and were in difficult positions because of COVID. And so we lowered the statutory liquidity requirement from 23 to 21. If you lower it, that means more money can be released. And the cash requirement from 8.5 to 6.5. This, in effect, is termed expansionary monetary policy. What does this all add up? And there's lessons from our past, where if we don't do it right, if other macroeconomic fundamentals are out of whack, if there is a huge external shock, pressures result on our exchange rate immediately and swiftly. To start with the graph on the right, the 40% benchmark, that is one of the quickest signals that there's pressures on our exchange rate. In 1984, when our sole US dollar earner was the sugar industry, BSI, and there was a shock to sugar prices. Sugar prices collapsed on the world market. Our reserves fell sharply. Our external assets ratio then dipped below 40% to just around 20%. That's the first one. And some of you may recall that at that point in time, or directly after, we had to go on an IMF standby program. In those early part of the negotiations, there was a call for Belize to let go of the exchange rate to float. The theory behind that is that you're making everything cheaper and thereby more attractive for foreign direct investment, and thus foreign exchange comes into your economy. That we resisted those pressures, and the economy turned around in a year and a half. The second period, and this one is more recent to everybody in the room, 04, 05, a runaway expansionary fiscal policy, loose borrowing, and then macro fundamentals became out of alignment with everything else. And again, the external asset ratio fell sharply, or fell below the 40% benchmark. And again, there were calls by external agency for the Central Bank of Belize and the country to let go of the exchange rate of 2 to 1. That then started the wave of debt restructuring because the fiscal side was imbalanced to a large degree. The other side is just looking at it from the 3 month of import coverage. Again, the 1984 shows that how we were well below it around that time. 1994, again, there was huge balance of payments deficit, and the government that came in at the time had to take significant stringent measures to correct that. And again, in 04, 05, you could see that correction since we are well below the 3 month benchmark. Highlights, where are we now? Well, central bank's foreign assets is over $1 billion. Our main imports by origin remains the US on import side. On exports, it is Mexico that tops the list, largely because of the re-exports through the commercial free zone. But still, USA is 1 and 2 on the USA is number 1 on the imports and number 2 on the export side. Import coverage is well above the 3 month benchmark. The external asset ratio comfortably above the 40% trigger that there's crisis or pressure. And the domestic bank's foreign assets is at a historical high as well, around $737 million. For some of you who did the math, I believe, on slide 7, where I had like the S, or before that, you would have noticed that when you sum all of those things, we're in a net positive position. And if you're in a net positive position, that means we are accumulating foreign assets. And that's clearly represented by the fact that domestic banks' foreign assets, as well as the central bank's foreign assets, are at historical highs. Now, cues, what you're hearing on the street, I wait 2 weeks from a foreign exchange, I can't get nothing, I don't get my approval from the central bank. A year ago, 2 years ago, the value of those applications were roughly around $100 million. They're now down to 24 million and steadily declining. And some of these are just recurring. So a commercial bank might just say, listen, I know such a retailer, you will come to me next month, I will put you down now. And that's the data that is received from the central bank. So we're doing quite well. I do still believe that there are instances when the central bank would receive a complaint from a customer saying that they can't get foreign exchange, but we try to seek that. We try to call the commercial bank directly to query that. And again, when I speak about macroeconomic fundamentals, particularly on the fiscal side, being sound with prudent fiscal decision making, the debt to GDP ratio is now down to 63%, 64%, and this doesn't include officially yet the Venezuelan haircut, which will drive it even lower. 2 years ago, during the COVID shock and the deep economic contraction, we were among the world's highest at around 134% debt to GDP ratio. And now, with this remarkable turnaround, we're around 64%. So, on financial stability, uh, if you think about our twin mandates, what on the negative side, on the exchange rate, we want to avoid a devaluation or an exchange rate crisis because then your purchasing power disappears. It's eroded overnight. On financial stability, we want to avoid a bank failure or a banking crisis because then the everyday customer's savings is threatened, is in jeopardy, and those savings can also disappear overnight. So it's a tall mandate. It's Central Bank of Belize. The financial system includes 85 institutions generating about 8% of GDP and representing total assets of around $6.6 billion. Of this total, all banks, credit unions, remittance service providers, development banks, and moneylenders fall under the oversight of the central bank. Think about it. We have a staff of 220 here and a supervision department along with other staff in ancillary departments, roughly around 40 to 45. And we have 85 institutions that we must oversee. It's quite a tall order. That challenge, just moving away from sheer size or muscle that the central bank has to do prudential oversight, is further complicated by the level of interconnectedness within the banking system. Now, the abbreviations here quickly. CB, commercial banks; CU, credit unions; IB, international banks; IC, insurance companies; DBs, development banks. Focus on the inner circle, the CBs. All the arrows are pointing to 3 commercial banks. On the outer circles, now you have credit unions, insurance companies, all tracing back to these commercial banks. The size or the thickness of these arrows then indicates the exposures of these other institutions to those 3. What it is telling, or what it should be telling the audience, is all of the financial transactions are concentrated in our system, are concentrated at these 3 commercial banks. In the worst case, or in a negative sense, should one of these financial institutions fail within that small 3, you're looking at ramifications throughout the system, the knock-on effect because of these connections and interconnectedness. Likewise, if there's a shock from one of the other outer institutions, one that has significant exposures to the others, that transmission happens just the same. That negative shock transmits throughout the rest of the financial system. And so, simply, these 3 institutions, to use the global jargon and terminology, are just too big to fail. These are systemically important financial institutions within the Belizean economy. In terms of financial stability now, if you look at this side, if you look at the pentagon shape, this is the median. This is sort of your ideal state where you're looking at domestic environment, GDP, domestic GDP, external environment, global developments, and also external GDP, global economic performance. Asset quality of the commercial banks, that, in other words, their loan quality, funding and liquidity, how well they're maintaining liquidity levels, and capital and profitability. Where you want to exist is somewhere around this pentagon to indicate that the system is relatively stable. For the past 3 years, you can see how we have stretched the bounds going outward. Higher out means there is concern, there is tremendous risk that the impact, that this could cause serious impact in the financial system. You could see in 2020, with the huge economic contraction, this became a critical situation that the central bank had to pay attention to, because that would have knocked on or caused lower capital and profitability, and liquidity also would have been an issue. The external environment, while it was still around here, was still registering or still coping with the impact of COVID. And asset quality, remember, it's a few months to years before you really would see loan quality deteriorate on a commercial bank's balance sheet. And that happened not until 2022 because of the requirements placed on the central bank and the forbearance measures that the central bank had to put in place. So you could see that asset quality stretched all the way out here in 2022. That's when commercial banks started to recognize these loans that were severely impacted by COVID. Some of them, which we call zombie loans, means that they were dead, that there were no chance of recovering because the impact was too severe. That impact which was caused by COVID. And so that's what the central bank, that's the landscape that the central bank has maneuvered through for the past 3 years. However, I think we have done a good job. Non-performing loans, the international benchmark, the non-performing loan ratio is at 5%. Net of specific provisions. Provisions mean monies that the central bank, as well as their own internal models for accounting standards, the monies that they would have to set aside to account for various risks and losses. Those non-performing loans, or a non-performing loan ratio, is below the 5% international benchmark. It is around 3.7, 3.5%. And where capital adequacy is concerned, capital is a cushion against losses within a commercial bank. The benchmark for capital adequacy is 9%. That's a legal requirement. On aggregate, the total capital adequacy ratio within the system is around 17, 18%, 16.5% in June 2023. So we have navigated turbulent waters, and the system on aggregate is quite fine. Now, payments and settlements. This is one of the mandates that have been lost, really, or that the public does not recognize as one of central bank's objectives and initiatives. A few years ago, I believe 2017, we launched our automated payment settlement system, APPS 3. I know I missed out a couple of the S's. But we really are transitioning to more digital form of payments. And the central bank led that initiative with a sizable investment, one in which other participants in the financial system were reluctant to do. And with this investment, we have had a steady incremental growth in the volume of online transactions and digital payments over the past 5 years. I would say that sum total of this is an astronomical number. The value of these transactions online tops 30 billion Belize dollars over the past 5 years. And the central bank will continue to make investments in digital forms of payments, one of which, the more recent one, is through the National Payment System, ZAC, that we have licensed digital wallets, and those will help us again towards our financial literacy project and campaign. But despite all these efforts to move towards online transactions, cash still appears to be king. As a comparison, when the central bank was established And looking back to 1982, public and cash on demand in a person's bank account total only $42 million. 41 years later, and we see at the end of July 2023, the total value of cash on demand and cash circulating within the public was $2.6 billion. Cash is still a major player in our market. Nonetheless, the Central Bank of Belize is committed to maintaining the public's confidence in our currency, and therefore we have made several upgrades to the currency from the past, where security features have been enhanced to make it easy to check the authenticity of the note, hence deterring counterfeiters. So whatever design graces our bills and coins, our currency will be safeguarded to keep it an attractive, reliable, and competitive payment instrument and store of value of choice in Belize. Now to the macroeconomic outlook. Just a quick recap, 2019, 4.5%, huge economic contraction. In 2020, 13.4%. We rebounded swiftly. 2021 with 15.2, 2022, 12.7. Now, over the medium term, the central bank has forecasted that GDP for the end of this year will be around 4.8%. This is our crystal ball. It is not 100% accurate, but I would like to think that this will be plus or minus a few percentage points somewhere around here. And then over the medium term, 3.6, 3.3, 2.9, 2.7. Now, one of the things which is again positive is that the medium term average growth is at 3.5%. This is 1.3 percentage points above our long-term historical average. This means simply that our productivity, the ability of our economy to generate higher economic activity has changed, has improved. And we can attribute that to some of the value-added processes, expansions that we're seeing in the primary and secondary sector, but also of the huge investment that the BPO sector has made over the past 3 to 4 years in our country. Growth in tourism arrivals will provide positive spillover effects on transportation, accommodation, retail, and business services. Tourism will still be our largest generator of economic activity. And for the central bank and for the rest of the public, the good news is that we don't see reserves dipping at any point in time, so the peg will be maintained. The purchasing power of our Belizean dollar is safeguarded through the medium term. Gross official reserves will grow by 9.2% on average and remain adequate over the medium term. Reserves will be strengthened by sugar receipts, grants, external loan disbursements, BPO sector. And with that, I conclude my presentation.
Thank you, Mr. Michael. We will now be taking questions from the media. We ask that you be conscious of everyone's time and limit your questions to what the governor presented on today. So let's get started. The first question, please kindly step up to the microphone. Say your name and the media house you represent.
Good morning.
Morning.
Marcella Maya, Crumb News. So I take it that you monitor the health, if I could put it that way, of financial institutions in Belize. So what would be your observations and comments in relation to the National Bank, seeing that the government had recently made, I think within the last year, if I'm not mistaken, about a $5 million, I'm not sure if the wording is actually capitalization. Yeah, so that's my first question. Do we have a limit or?
Let's just be conscious of everyone's time. So no, not a limit per se.
You could stay there if you want, Marisol.
Yes, you can stay.
I don't see anybody else eager to jump up behind you, so it's fine. One of the things which, if I could go back here, Just a second. Yeah. If you notice this smally bubble out here, um, you can deduce that, well, there are 4 commercial banks who are licensed in Belize, and I focus on 3 there. National Bank is the smallest of the 4. First point. Second point, capital injections aren't something to be overly concerned about. Capital injections of a financial institution occur over time, depending on strategy, depending on, as you rightly said, balance sheet dynamics, depending on funding, depending on, I said strategy, where the bank wants to go. Now, National Bank, I think, what I know is pivoting to a different type of strategy. In order for the National Bank to effectively do that, that capital injection will certainly help, or that capital injection is needed. And that's where I'll leave my comments on that one.
Okay, and then because we haven't really had these opportunities to ask you all the questions that we'd like, since the whole scandal in relation to the real estate, I can't remember the name right now, but the real estate land scam that
You're
came,
talking about the one down south.
right, that came on the view of the FSC in the US, and there was a link.
FTC, the Federal Trade.
Right.
Yeah.
So there was a link in relation to one of our local banks, and we've never had an update in relation to oversight and monitoring regarding what happened with the banking institution.
I don't think that link was ever established, Marisol. What was speculated was that the ultimate beneficial owners were the same between that international bank and then a domestic affiliate. It was never proven. If that were the case, I think the FTC may have taken further action on that institution.
Okay, but in terms of the review by the central bank, that would have been done because there were financial transactions that were made, and I don't think that those,
the financial,
in terms of the movement of money though.
The financial transactions that were on that domestic bank's book was very, very small. I think it was just around $40,000 compared to the size of the scam. So again, that, sorry if the central bank didn't clearly say that or didn't have input in some of those press conferences that were happening at the peak of this crisis. But on that domestic bank side, the financial transactions that could have been linked, it wasn't even a direct link to that Sanctuary Bay, I believe that's what you're referring to, was very, very small.
Okay. And then the developments in relation to loan repayments after COVID, how has that progressed? I mean, there were measures that were put in place by the central bank, and I think it was expected that some people would not recover to be able to continue making payments.
Well, we saw that, and I mentioned that in the presentation, that some of these loans were deemed unrecoverable. The central bank had crafted a well-developed a good strategy to deal with the impact of COVID on asset quality and loans. And then we devised an exit strategy for the system to come safely and cleanly out of this huge impact on asset quality. And we see that it's working, that the strategy is working because we have non-performing loan ratio below the benchmark and capital adequacy above the benchmark on a system-wide basis.
Thank you for your questions. Mr. Vasquez?
Yes, good morning, Jules Vasquez from Channel 7 News. Mr. Governor, you spoke about the oversight of the financial system, 85 financial institutions, and you have a small staff overseeing all that. I can imagine the level of attention needed with the volume of transactions. Are you able to speak about SFXCU? We know a new administrator has been installed. I think the last one um, stepped away. And so we just want an update of how much longer it will be under administration and what is the situation with the security of the assets for all the members, which are have to be in the thousands.
Yeah, so to start from the last part of your question, when the administrator was appointed and he began a work with his team, he found he supported what the central bank was finding throughout the central bank's offsite and on-site examination. In other words, that loans weren't properly being assessed in terms of the borrower's ability to repay. So a lot that was, or a significant portion that so some of these loans that were on St. Francis's balance sheet were in fact non-performing, and some of them should have been properly categorized, and provisions should have been occurring already to safeguard the interests of the members. So the administrator began to work earnestly with his team to correct for the poor loan administration that was occurring at St. Francis, as well as to up the collection efforts, which worked or has been working so far. He was able, that despite all these challenges, to provide a rebate during that, not the AGM, but the special meeting that was held a couple months ago. So he's setting up the proper governance. He had set up the proper governance framework, and the staff was completely on board with his efforts. I say that only because that we have a good feeling of St. Francis, and we want St. Francis now, in terms of governance and performance, to be a model for what credit unions should be. It's a target to achieve, because a lot of the credit unions have not elevated their governance framework. And a lot of the issues which we see in the past that has troubled credit unions has boiled down to governance, weak governance systems within the credit unions. The transition now is that once we have placed in these governance framework and other policies and procedures, we expect this to be no longer than a year. So we're targeting, depending on how well we do these things, and I mean we in terms of the registrar of credit unions and the administrator and his team, is looking as the final date will be next year, June. So roughly a year and some change. And I say June because that's when an AGM could be held or should be held. But again, this is just a target date. It is not set in stone, and we want to make sure that all the proper systems and policies, procedures are in place. As far as the shift in administrator, the previous administrator had received a more lucrative offer, one in which the credit union could not match, and one in which the registrar would not have accepted, even if that administrator had requested to stay. So it is nothing to do with the administration itself or the operations, but rather that he went on to greener pastures. Now, the person that's replacing him was part of his team early on. So it's a seamless, smooth transition. Mr. Marlo Neal is just as seasoned as Mr. Martin Marshalek. And so we expect that there will be no hiccups, no bumps in the road.
Okay, and you raise an important thing. The administration of credit unions in general, which have, from my experience and certainly from observation with various events that have happened in the news over the years, less stringent fiduciary oversight, much more informal business, friend and friend, as we'd call it in Belize. In fact, it has been said, and this is anecdotal, but it has been said that if the standards that were applied to SFXCU were applied to many other credit unions in the country, others would have also ended up on a stringent administration. Is there anything in place or anything that you all are able to do to regularize or upgrade the standard of oversight in the interest of protecting the very large assets some of these credit unions hold?
So for the past maybe even longer than 7 years, we have been trying to bring about a new credit union act. We have been unsuccessful in doing so, and I don't want to go over the reasons why we have been unsuccessful. But come December this year, the central bank, the registrar will have a draft of a new credit union act, which we will then seek support from the Belize Credit Union League for its implementation, the repeal of the previous Credit Union Act, and then the implementation of this new one. It begins with the tools granted to the registrar under the Credit Union Act. The current Credit Union Act is dated, and so we want to bring about the global standard now for credit union operations, and we can only do so if we repeal the current act and institute a new modern credit union act. So it starts there, and of course the central bank is increasing its staff complement to heighten its overall vigilance and surveillance of the domestic banking system. So we expect a new credit union act that will give us the teeth to then do more, not only on the credit union side, but also we have looked at money lenders, and we're also doing different things with the commercial banks to increase or heighten or improve the standard across all financial institutions licensed under the central bank.
I know that there is legal action pending regarding St. Francis Xavier Credit Union. Is it a fact that while the administration continues, while the matter is pending, that the previous general manager continues to receive his regular salary?
Yes.
Why?
The law doesn't allow us to do anything other than that at this point in time. And the registrar, I choose not to comment on other actions and steps which we will take to address that.
Okay, I know that as a banker, you have to adhere to the whole maxim, no call, no name. And in your overview of the banks, you spoke about overall financial stability well under the threshold, etc. However, there are concerns in the commercial banking system. I believe, if I remember the balance sheets, one of the banks made a very large profit, one made a significant loss, and the other, I also believe, made a loss. I understand that if you look at the overall, the picture appears stable and encouraging. But is there individual concerns regarding some of the commercial banks?
Not to the point where the central bank will elevate any sort of regulatory response. The concerns are simply outside of what we consider maybe calm. And it's rare in a financial system where there will ever be a period of harmony or calm or still waters. Just by the nature of a competition, by the nature of how your economy is constructed, by the strategies employed by each individual bank, maybe some targeting agriculture over tourism, of course, external shocks, you will always have different impacts on balance sheets. That's why the regulator is here. The regulator is here to make sure that those, wherever there might be a little bit of smoke, that it is properly addressed and we safely navigate out of those.
Are you able to speak about the issue of overall, as regards to banks, as regards to commercial banks? Many people at the ground level complain about all the ancillary fees or even the 50 cents they have to pay when at a certain bank when they make an ATM transaction. It might seem mundane, but it's these things add up, all the banking fees. And I know that the central bank, having shown that it is on the side of the average person, the consumer, with the recent fixing of the exchange rate. Is this something that you all look at, all the ancillary fees that banks charge people for their own money?
We have. We have also, I should let you know that we have developed a practice direction that should come into effect in December that will target some of these fees that we have deemed as unfair or excessive. While I might not be in my best interests or within norm to call the bank's name, I'm sure you can. The issue we're having is a depositor across every point of access at a commercial bank is charged for that bank to keep his money. That, I think, stretches any sort of fairness boundaries or consumer financial protection ideas that we may have. If you go to an ATM, you're charged. If you said, well, boy, I make a try running for over the counter, that's $2. And then if you do an online, you're looking at between $2 and $11 depending on the type of transactions that you're doing. And that is not a situation where I think the central bank, or that is not a practice which I think the central bank should sit by and allow. Now, if that pricing had made sense in terms of, well, let's structure it in a way where we're driving people to less use of cash and more online, then maybe the central bank would have taken a step back and listened to whatever appeal or objection the Bankers Association would have had. But for right now, that pricing doesn't make sense because the cheapest form of access is going to an ATM at 50 cents and pulling out your money. You're not being penalized for using cash. You're steering me to use cash because the other access points are higher.
Okay, I know, mindful of everyone's time, my last one.
There's nobody behind you. Sorry.
The one thing you didn't speak about, sir, was excess liquidity, or maybe I missed it.
Yeah.
I know it's something the Prime Minister keeps referring to. I believe it's at probably $600 million. And there are measures which a bank can take for banks just sitting on money.
Not the type of measures that would be effective. Yes, liquidity is at a record level, but that liquidity is largely concentrated in one commercial bank. Now, that commercial bank has certain structural deposits that need to be addressed. And once those are addressed, I think you will see a lowering of liquidity. And I say structural because a lot of that liquidity is as a result of a merger that took place. And once that is unwind out of, you will see liquidity take a little bit of a decrease. But you're right, we also want to encourage lending more. The other variables which we look at, such as foreign assets, impact on our balance of payments, lending would not result in any situation where reserves are threatened through higher imports. So we want to urge banks to lend, but we don't want to. I don't have a good grip whether or not there is other more blunt penalty that the central bank can use. And some of those being floated is a tax on excess liquidity. I don't have an informed position on that yet.
Yeah, but so it is a matter that's exercising some attention from the central bank because it's a major it's a slowdown in the economy that all this money sitting there unavailable.
I would say that lending has picked back up.
Yeah.
And if you look at where the liquidity is concentrated, then it complicates the central bank's response to address that because it's not across the board.
Understood. Okay. I mean, I could go on, but I'm mindful of everyone's time.
Okay, thank you for your questions. Any other media host has a follow-up or another question?
I've checked.
Okay.
So to follow up on one of the questions that Jules had asked, so people have often commented that when they go to, and I think it's not only limited to Asian grocery stores, they get charged $2 to swipe their card. And so if they have to go to different places, and so it adds up. Is that one of the things that will be looked at? And then there's another, something that happened recently that I experienced myself, where one banking institution indicated that they were having issues. I'm not sure if it's with their computer system, but the result of that was that the figures that you would see when you went online and checked your account, those were not the accurate figures. So you didn't really know where you were unless like you really keep all your accounting in check, right? So, but that happened, it was resolved,
Yeah.
and I'm noticing that it's still happening. Like they take a few days to ensure that all their figures are updated, and this is beyond weekends and holidays. So those two are coupled. And then if I could, because we're going to have to leave shortly, just two updates on two other matters, and I think Jules missed one. The one about
Oh, this
it
is a
was
tag.
his
This is a
question.
tag team.
It was his question that
Yeah.
he had brought
Yeah.
up when we had the Zoom regarding the press conference about the value of our money when we go to Mexico. I'm just listing all of these because, as I said, I'm going to have to leave shortly. And the other one was whether you could provide an update in terms of the central bank's input regarding the credit reporting system. And the other one was regarding stock exchange and the move for Belize to have that.
Yeah, the last one is easier. Well, the central bank was the lead agency in developing the Securities Act. That has now been assigned or shifted to the Financial Services Commission. And I'm a part of that commission, or the central bank is a part of that commission. And the next key piece of regulation or law is the securities industry regulations, and that will be finalized in the next 2 weeks. For any sort of follow-up questions, I must direct you to Mr. Claude Halak on that. But it's near, I would say. Secondly, I'm not sure what else I can say on the peso. We are tied to the US dollar. If you're crossing the border, you will know that Mexico floats its exchange rate. And you can either get a price, depending if you're changing US dollar cash, which I hope none of you have in your pockets here, or if you're chasing Belize dollars, if you're changing Belize dollars, you would see various movements based on the performance of the Mexico economy. It's nothing that it's within our control. We are pegged to the dollar, to the US dollar, and dynamics in Mexico will then impact how much pesos you receive for the Belize dollar or for the US dollar. That's just as simply as I could put it. On the credit reporting system, yes, we have relaunched that project. You know, this is something that the central bank has been trying to implement for almost 10 years now. And we are now going through the process of vendor solicit, or at least drafting the terms of reference for vendor. The impact of this should be clear. You would have less information asymmetry. In other words, a lender could tell exactly by looking at Mr. Vasquez, at Jules, and say whether or not his character is good and whether or not he is more inclined to pay than the other individual. And character is one of the 5 C's of lending credit. So if you have a database, whether it is your light bill that you're paying consistently, your water bill, whether you're paying a loan at a commercial bank, again, with the highest level of confidentiality, I will be able to tell whether this person has historically been a good payer and not a hard pay person. And that helps in the financial intermediation part, how quickly loans are disbursed by any financial institution. The first one, which one you may say?
In the interest of time, we can do follow-up after.
Yeah.
You can send your questions.
The $2 charge. Yeah, we've heard that as well. What we're trying to do is look to see whether or not there's room for us to put in clauses in our national payment systems regulation. We have an act where we can, but I don't think we can do much about that there. But what is clear is that this is a contract between the retailer or the store and the commercial bank, which has the machine, which has a card reading machine. Within that contract, there should be clear obligations and charges or clauses in there that restricts. In fact, as far as we are concerned, if you're running on Visa or MasterCard platform, you cannot do that. So this already is illegal in some sense, but it is not one where the central bank has enough jurisdiction so far to go after the vendor. This is between 2 commercial agreements, and that commercial bank, maybe even higher up, is the one that should be pursuing this with the retailer. And on the other issue with bank balances, I hope it has been resolved. For anybody else who is having this problem, please email the central bank, call us, telling us of the situation where your balances are not being properly reported, either on your online platform or over the counter.
Last question.
Last question. Sir, if you could speak, and please don't open your eye big like the Prime Minister. We're asking about the role of the informal sector, which is hundreds of millions of dollars. Nobody knows where it comes from. Nobody knows where it is banked, how it gets banked, if it gets banked. But it's a huge elephant in the room, even though it's a phantom. It is a significant factor in our economy. And someone at some point has to say, where is all this gray money appearing from, and how do we quantify it or factor it in our economic consideration?
I saw your question, and I didn't necessarily know what you were referring to, because the informal economy has a specific definition for us in economics. And some of the informal type of activity means not being captured in official economic statistics. We made that circle bigger with the new GDP series. So we were able to capture some of what is not included in statistics. So if we're looking at economic activity, in every economy there will be some level of that, whether it's the hair braider or whether it's the lead craftsman on the side. There will always be some level of that. But I don't think you were necessarily referring to that. I think you were, it seems that I can't answer any question about narco money, Mr. Vasquez. There are assigned agencies specifically with that under the national framework. We are a supervisory entity. We have the Financial Intelligence Unit and the Police Department as lead agencies within that. The central bank then, within its sector, issues guidelines to address some of these things. We hope that those efforts at those other levels restrict the level or size of that great economy which you are referring to.
Okay, thank you for your questions. Thank you for your questions once again. I'd like to remind you of the evaluation form. Kindly use the QR code to access the form. Let us know your thoughts about today's press briefing, how we could improve, what you liked, what you didn't like. And lastly, I would like to thank you for your attention and attendance today. We hope you're able to glean insights into the roles and functions of the central bank, along with the Belizean economy. If you have any follow-up questions, kindly contact us using the email provided, info@centralbank.org.bz. If you would like to speak to an individual, the bank's point of contact is Miss Jacqueline Dragon. With that, I want to thank you for coming, and I wish you a wonderful day. Thank you.
No, I think I'm boring.